all things considered, Sean, are you from a US equity markets perspective, are you constructive? Are you of the view that they might be sideways, or are you negative? And thereby, the follow-on in effect, let's say on EMs, wherein the Indian viewers' interest comes in, how constructive or not constructive are you?
So I think we are constructive on US equities, mainly because we think it's a growth recession and not a credit one. And we would change our view if the latter was to occur. And that would be a policy over tightening. The one thing about the US is that it's a cleaner story. We know we're somewhere through at least half or 2/3 of the rate tightening cycle. So yes, it's not particularly pleasant looking at the screens at the moment and trying to work out the lag effects, but it's a lot easier in the respect of looking at, for example, Europe or the UK, which have got much more stagflationary environments. One thing we can certainly say in the US, it's not stagflation. Growth is trying to revive and inflation's coming down. I think for Asia and EM, it's been I think the positives to take away really is that with oil at times being over $100, a record strong dollar itself, a very, very subdued China economic cycle, Asia and the EM has actually performed relatively well. If you told me that we would have those three variables moving so adversely 12 months ago, I would have expected much more of a fallout, but that's not the case. So that sets Asia and EM up to be actually relatively good places to be, sometime in 2023.